Back. So for the first time since December, Federal Reserve lowering the interest rates, this time by 1/4 percentage points. We have financial advisor Bruce Allen joining me live. Bruce, thank you so much for being here.
Good morning.
You and I were talking about this at length last night, and it's almost tough to put this into just 2 minutes. But I think one of the big things is, why did the Fed decide to lower the interest rates? We know those jobs reports have not been great, and this has been something that folks have been anticipating for a few weeks now.
Yeah, last week what we saw, Dan, was a total revision of jobs growth since the winter of 2024. From April 1st to 24 to March 31st, it was previously thought we grew the jobs market by about 1,000,008 jobs. That number got cut in half last week, so down 911,000 jobs. The second thing is, over the last 3 months, instead of growing at 30,000 jobs, or excuse me, at 150,000 jobs, we've grown at 30,000 jobs. And we even saw a negative month in June. So jobs growth has been rocky since the April of 24.
Sure. So why did the jobs market influence the Federal Reserve so much when it came to this meeting?
Good question. Fed has two mandates: one, to control prices, control inflation. The other one is to make sure they promote maximum employment. With jobs growth this week, the Fed felt that they had to step in and put the gas on the economy a little bit, put their foot on the gas pedal, make sure the economy is still growing, and help promote jobs growth by lowering interest rates.
So I think a big question that a lot of people have is looking forward. What does this symbolize? There's going to be more meetings. There's already people talking about possible lowering of interest rates further, but I think taking it from the 30,000-foot level, what does this mean about the economy? Is this kind of just a little bump in the road, some minor turbulence for the time being, or could it be indicative of a maybe more serious downturn?
Let's talk about the first question you asked. What's this mean for interest rates? Number one is the Federal Reserve and the bond market think that the Federal Reserve is going to cut two more times, or another 0.5%. So we started yesterday at 4.5%.
Yeah.
By tax day, we may be down around 3.5% on rates, and that's the guess of the Federal Reserve projections as well as the bond market. Not a guarantee, but a guess.
Yeah.
The number two thing is that when people thought previously the jobs were growing at 150,000 jobs per month, very healthy economic growth. Now, hiring peaked in April of 24.
Yeah.
It has slowed down considerably since then, and the Fed had to step in last year in September to lower interest rates because we had a negative jobs number in August and October last year. Are we in a recession?
Yeah.
Possibly. Could we already have had a recession? There's two camps of people out there saying both right now.
Yeah, it is a word that's been thrown around, I feel like, for the last few years. Bruce, thanks so much for being here. Want to get back over to Lisa with a check of the weather. Good morning, Lisa.